Hey guys, welcome back to Snowball Investing. This is going to be the January portfolio update, and it's been an absolutely amazing month. Markets are absolutely ripping, nearly at all-time highs. My portfolio has done very, very well, so it's up nearly £19,000 in the past month, and we'll get into all of that in this video. You may have noticed I've removed the word Vanguard from my video title, and that's because I've totally sold out my Vanguard general account. And the reason for that I've discussed in my other video series I have called Road to Retirement series. If you haven't seen those videos, check those out. Basically, I'll go through my entire investment portfolio, which is over $500,000. So check that out and the reasons why I sold out. That's enough rambling. Let's jump straight into the Freetrade Stocks and Shares ISA. The value of the ISA sits at £256,018, although you'll see the price fluctuate because I'm still recording this during market open hours. And in the past month, the portfolio is up by 7.41%, which is the equivalent of £18,996. Looking at the portfolio performance, on a money weighted rate of return, the ISA is up by 441%. And on a time weighted rate of return, it's up 277%. In that same time period, the FTSE All-World Accumulating Fund is up 30.95%, so quite handsomely beating the World Index Fund. Taking a look at the portfolio breakdown, you may see a slight difference here from last month. So stocks is 84.2% of the overall portfolio. Bonds, which is a new addition now, that's 12.4%. Cash 2.2%. REIT 1.2%. Looking at the recent activity, you'll see a lot of mention of UK Treasury bills, which are my bonds. So I had a lot of cash sitting on the sidelines. It wasn't really gaining me any interest, so what I've been doing is using the UK Treasury bill to give me a little bit of income while I've got cash on the sidelines. So you'll see a few mention of those. Obviously, I top up every single month. So I put in £1,666, which maximizes the £20,000 ISA limit. And the only stock I've bought in the past month is Alphabet. I've added a little bit of Alphabet on the 27th of January. You can see a bit of interest, and that's just from the cash I've got on the account. And lastly, there's a dividend from SL Green Realty. Just expanding on the UK Treasury bills, so I've got nearly £30,000 worth in UK Treasury bills, which gives me around sort of 4.5%. I've also got a bit of cash on the sideline as well, and the reason for that is I've sold a chunk of my highest winning positions, which are Palantir and Rocket Lab, so they perform very, very well. And as I touched on in my last month's update, I've just taken a bit of profits from them, taken some of my initial investment out to de-risk them, and I'm just sitting on, a fair amount of cash. I have been buying a little bit, although I am waiting for opportunities in the market, and when they rise, I'll have that cash ready to deploy. My only concern is I don't really see much opportunity for downfall in the market. I think the market overall is running a little bit on the rich side, but everything seems to be going in the right direction. Inflation is going down. We recently had a lot of company earnings, and the far majority of them have performed very, very well. So unfortunately, this is the downside of keeping a lot of cash. When you've got years of a bull market, you tend to miss out on it. But for me, I'm okay with it. I'm gaining interest via the treasury bills, and hopefully there's a pullback. And if there is, I will snipe at those opportunities. Taking a look at my individual positions, as we always do, let's start off with Palantir. So the value of Palantir now in my portfolio is 150,436. I've got a total of 2,260 shares, and I'm up 618% on this position. I think the market really truly realizes the potential of Palantir, especially with the AI hype in the market. So if you look at the stock price of Palantir in the past month, it's up nearly 10%. It did have a bit of a dip around the $63, $64 range, but since then, people have just been buying it, and the price has just skyrocketed up to $82 or nearly $83. Luckily, I have a very low average price per share, sitting at £9.26. So I timed that very, very well. And my unrealized gains for this position is £130,073. I think there's no doubt that Palantir is priced very, very richly, almost priced to perfection. And for me, I'm not really planning to buy any more anytime soon. I think my buy range is around the $50 to $55 range, if I'm totally honest. Whether it will get there or not, I have no idea. We do have Palantir earnings on Monday, so that could determine if this goes down quite a bit, or actually it might continue all the way to $100. If I'm totally honest, I don't follow the numbers as much as I used to, but I have no doubt that Palantir will smash their revenue expectations on Monday. The one thing to bear in mind, and there's a great article on Seeking Alpha from Type F Capital, is Palantir could be affected by a SARS expense, which is essentially a type of stock-based compensation. And I don't think the market is pricing in this, so it could affect its EPS earnings. So maybe there is an opportunity here for me to buy some more at some great prices. But we shall see Monday morning, and I'll give an update next month around what I think of the earnings and what are my new expectations or new price target on Palantir going forward. Another stock that's doing really well is Rocket Lab USA. So this sits at £20,978 and is up 669%, so actually even more than Palantir. For me, this was a bit more of a risky play, and luckily it's played out. Last month I did de-risk this by taking out around 60 to 70% of my initial investment. So for me, I can totally let this run for the next 5, 10, 15 years, and I'm going to sleep easy at night. I've got no issues with holding this. And I think Rocket Lab are going to produce great things, and it's going to be a great company in the future. Next up, we have the FTSE All-World Accumulating Fund that sits at £15,687 and is up 26.66%. SoFi had their earnings this month, and they beat on expected revenue and EPS, which was no surprise because they tend to do that every single month. Although they had some semi-cautious guidance for 2025, but the stock did take a hit on the day of earnings, but it's kind of rebounded since. And for me, I'm happy with the trajectory of where this company is going. So for me, it's a hold for the long term. The only stock I've been buying in the past month is Alphabet. And for me, there doesn't seem to be any obvious opportunities in the market to buy. I mean, I like to buy stuff when I think things are undervalued. So I was buying Palantir between $7 and $12. I was buying Rocket Lab, it was $3 to $4. So I don't really see those opportunities. Out of the big tech stock, I think Alphabet is the most undervalued. And I think they're going to absolutely smash earnings next week. So we'll see if that actually comes true. So I've been nibbling on Alphabet, but apart from that, I just want to park my cash at the side until I can see some obvious opportunities. And when they occur, I'll be ready to capitalize on them. Chewy seems to be holding up okay, so that's valued at £4,062 and is up 59%. PayPal is sitting at a gain of 30.1%. Meta is another company that had its earnings, and it continues to surprise me. It's an absolute cash flow machine, smash EPS earnings, so yeah, I'm very, very happy with this position. Just gutted I didn't buy more when it was trading very, very cheap just a couple of years ago. Green Realty is up 123%. Tesla, that's up 93%. And Microsoft, that's sitting at £1,506 and is up 55%. And Everest still is just a stock I can't sell, so it just sits at my bottom of my portfolio, down 9.9%, but it's only £26 worth. So that concludes the stocks and shares ISA. So let's move over to the general investment account. The value of the GIA sits at £22,395 and is up 10.9% or £2,461 in the past month. I have recently sold 3 stocks in this portfolio, so Enphase Energy, Intel and NEO. Really, they were to offset the capital gains I'm going to make from selling these stocks in my Vanguard general account. As I mentioned, if you want details of why I'm doing this, check out my Road to Retirement series. I should be making a video on that very, very soon. So I've only got a small number of stocks in this portfolio. mainly big tech. So Meta is at £9,054, and that's up 343%. I bought a lot more heavily when it dipped a couple of years ago, so that's why I've got a much larger position in this GIA. Alphabet, that's up 82% at a value of £5,462. I've actually got Amazon in this portfolio, so it's a little bit of a smaller position at 3,405, but that's up 126%. Microsoft, that sits at £999 and is up 58%. JP Morgan, that's done very well as well since I bought it. So that's up 123%. And lastly, a smaller position of Starbucks, that's up 36.53%. I don't plan on buying any more stocks in this general investment account. If anything, I'm going to slowly sell this over the next couple of years, utilize that capital gain allowance we get every single year, and slowly transition a lot of this cash either into my ISA, my spouse's ISA, or either our pensions, as it's more tax efficient. So that's going to conclude the January free trade portfolio update. I'll catch you in the next month video.